The truth about real estate investing. Robert Kiyosaki's guide to your first property. One of the best strategies for making money and guaranteeing financial independence has always been real estate investing. However, it might be intimidating to begin since there are so many different voices and approaches available. The author of the groundbreaking book Rich Dad, Poor Dad and How to Buy Your First Investment Property, Robert Kiyosaki, comes next. Kiyosaki, who is well known for his unorthodox but incredibly successful financial theories, places a strong priority on cash flow, debt management, and above all, financial literacy in his real estate investing strategy. We're delving further into his suggestions for purchasing your first investment property here and examining how these ideas might serve as the cornerstone for long-term financial success. Imagine this: you buy a property, renovate it, and let it generate income each month. Simple, right? But what sets Kiyosaki's approach apart is his emphasis on building an income stream that grows steadily over time. His investment philosophy uses real estate to create consistent cash flow, minimize tax burdens, and achieve financial independence. It's a method that challenges traditional thinking, yet provides a practical, goal-oriented roadmap. Let's break down Kiyosaki's 7 key principles to uncover how his method not only works, but can also help you achieve sustainable financial success. Number 1. Start with cash flow, not appreciation. In traditional real estate strategies, appreciation, or the increase in a property's value over time, is frequently the main objective of conventional real estate plans. However, Kiyosaki suggests an alternative strategy. Prioritize cash flow. The amount of money you make each month after paying for things like upkeep, property taxes, and mortgage payments is known as cash flow. By concentrating on cash flow, one may lessen dependence on market swings and achieve stability. Why is cash flow so essential? Unlike appreciation, which depends on unpredictable market conditions, cash flow is steady, providing you with a reliable income. Without cash flow, properties can quickly become financial burdens, especially during downturns. Kiyosaki cautions against solely relying on appreciation, as market shifts can lead to over-leveraged assets that are costly to maintain. Instead, he suggests prioritizing rental properties in high-demand areas, such as single-family homes or small multifamily units where tenants are likely to stay long-term. Number 2. Leverage debt wisely to build wealth. Another essential Kiyosaki principle is the use of leverage in real estate. Leverage refers to using borrowed funds like mortgages or loans to finance properties. This allows investors to control larger, more valuable assets with minimal upfront capital, which can significantly amplify returns. But there's a catch. Leverage can be a double-edged sword. Kiyosaki emphasizes using good debt, or debt that generates income sufficient to cover payments and expenses. When leveraged properly, tenants' rent pays off the loan, effectively increasing your return on investment without risking your financial stability. However, poorly managed debt or excessive borrowing can lead to financial distress if your property doesn't generate the expected income. For this reason, Kiyosaki advises investors to carefully analyze interest rates, property expenses, and rental demand before leveraging debt. By using leverage wisely, you can control more assets and potentially increase your wealth without depleting your savings. Yet, smart debt management is crucial to keeping your investments profitable and secure, one of the foundational principles of Kiyosaki's strategy. Number 3. The BRRRR strategy: buy, rehab, rent, refinance, and repeat. Kiyosaki's real estate strategy also includes the BRRRR method, a technique for rapidly building a property portfolio without constantly pouring in fresh capital. Here's how it works. Buy. Identify undervalued properties or those needing renovation, like foreclosed homes and auction properties. This allows you to buy low and maximize profit potential. Rehab. Improve the property to increase its value and make it tenant-ready. Renovation should boost rental appeal without overspending. Rent. Once renovated, lease the property to generate monthly income. Rental income covers expenses and provides cash flow. Refinance. After building equity, refinance to pull out some of the initial investment, creating capital for your next property. And repeat. Use refinance funds to acquire additional properties, creating a cycle that expands your portfolio without depleting your cash reserves. Number 4. Assemble your real estate dream team. Investing in real estate is a team effort, and Kiyosaki stresses the value of building a reliable dream team to help navigate various aspects of the investment process. A solid team ensures that your investments run smoothly and profitably, even if you're not directly managing every detail. Key members include an accountant, who maximizes tax benefits and ensures compliance with tax regulations. Lawyer, navigates complex property laws, tenant rights, and liability issues. Property manager, handles daily property operations such as tenant relations and maintenance. And mortgage broker, secures favorable loan terms and guides you on how to maximize leverage safely. Because each team member brings specific knowledge to the table, you lower your risk and steer clear of expensive mistakes. Finding the right people, not simply the right properties, is the secret to success for Kiyosaki. Effective team leadership will help you create a strong support network that increases the life and profitability of your investment. Number 5, invest in financial education. Kiyosaki has long been a proponent of financial education, arguing that financial literacy is the cornerstone of any successful investment. Real estate investing comes with unique risks and rewards, so understanding principles like cash flow, tax benefits, and risk mitigation is essential. Kiyosaki advises new investors to start with books, online courses, and, if possible, mentorships to gain a solid foundation. Financial literacy not only protects you from costly mistakes, but also empowers you to spot profitable opportunities and make sound decisions. Invest in yourself first, Kiyosaki advises. 6. Use smart tax strategies to boost returns. One of the most overlooked advantages of real estate investment is its tax benefits, which can significantly improve returns. For example, depreciation allows you to reduce your taxable income without impacting actual cash flow. Additionally, deductions on expenses like property taxes, insurance, and mortgage interest further minimize tax liabilities. For Kiyosaki, a skilled accountant is indispensable in maximizing these advantages. Leveraging legal deductions lets you keep more of your rental income, effectively increasing your returns. Did you know that the tax code has many provisions for real estate investors? Number 7, plan your exit strategy from day one. Kiyosaki believes that successful investing starts with a clear exit strategy. Knowing how and when to cash out your investment is crucial for meeting your financial goals. Exit strategies can vary based on objectives: holding properties for passive income, selling for a profit, or refinancing for equity access. For example, if you're aiming to build a passive income stream for retirement, holding rental properties long-term may be your ideal exit strategy. Alternatively, if you prefer faster gains, a buy and sell approach might be better suited to your goals. Planning your end game ensures you're prepared for market changes and helps you avoid holding on to properties that no longer fit your objectives. While traditional real estate strategies often focus on market timing or appreciation, Kiyosaki's model offers a roadmap that prioritizes financial security. His principles, cash flow, smart debt management, and tax advantages are designed to create sustainable growth. Each property acquired through his method adds to your income stream, increasing financial independence and providing security. Each property you acquire isn't just an asset, it's a step closer to financial independence. With patience, knowledge, and a disciplined approach, Kiyosaki's roadmap helps you unlock the full potential of real estate. So, are you ready to start investing? Following Kiyosaki's roadmap might just be the key to securing your financial future, one property at a time. Start small, stay informed, and let each property bring you closer to financial freedom.